Good morning, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise, and we're joined this morning by Andrew Corbett. Now, Andrew is the CEO and MD of Kingston Resources. He's been kind enough this morning to lend us his time and expertise regarding the company. As always, we're going to kick things off with a presentation from Andrew, and then he's going to hand it back over to me for our usual Q&A. I've got a couple of questions that will kick us off with the Q&A, and then we will obviously shift to your submitted questions. So as always, please submit any questions you have for me to ask Andrew through using the Q&A function on Zoom, and then obviously I will ask away. Andrew, thank you very much for your time this morning. The floor is all yours.
Thanks, Ryan, and appreciate the time, and thanks everyone at Sharewise for setting this up. It's a great opportunity to talk about Kingston and the recent transaction and get into Mineral Hill as well. And I just want to quickly take the opportunity to thank the entire Kingston team because it's been a huge effort with a fantastic workforce we have at Misima and also at Mineral Hill. So I just want to thank everyone. We've grown from 3 people to about 140, 150 today. So it's been a great team effort. So predominantly today, I'll talk about the MISMA transaction, and then I'll talk about basically the growth plans for Mineral Hill. Happy to take the questions as we can and sort of try and make this as interactive as we can through a webinar. I'll just jump through the disclaimers. They're important. Everyone, please go and read them later. So just starting on this side, so we'll just point to that mill there. That's our Mineral Hill processing plant. We've refurbished that mill over the last few years, and the site team have managed that ourselves. And one of our proudest aspects of everything we've delivered at Kingston is the self-managed, self-perform approach that we're doing. And we delivered this mill refurbishment for $14 million. So it's a credit to the team, and that's one of the driving assets that's going to deliver a lot of shareholder value in the next few years for Kingston. So we'll talk about Mineral Hill. We are producing. There is 760,000 ounce resource base there, gold equivalent. We have reserves in both the open pit and the underground. Our future will be underground. We have about a year left in the open pits, and that's predominantly gold production, and then we'll be getting into the underground production. We'll deliver both copper and gold with lead and silver credits as well. Post this transaction, obviously, priority now moves to closing it, which is a number one agenda at this point. And now that we've signed the binding documents, so post this transaction, we are selling Misima for $95 million in total. Obviously, there's a few steps in that. I'll talk you through that. So it's $70 million of cash and then royalties, subsequent royalties once the asset's in production. So we'll walk through that. Our strategy, quite simply, post the transaction is to look at expansion plans and infills at Mineral Hill. We want to make Mineral Hill bigger. We have a 6-year mine life. I'd like to see it 10. I'd like to see it longer. And also I'd like to see the production double. So there's some of our aspirations, and we'll try and put some detail around that today on the call. And infrastructure, we see that Mineral Hill is a very well-positioned asset in terms of strategically placed in that southern Cobar. There's 4 operating plants up in the north. There's only 1 operating plant down in the south, and that's our plant at Mineral Hill. So we're quite excited about that future there. So we purchased this Mineral Hill in January of 2022. Had to remind myself there. And since then, it's delivered about 140 million in revenue and 38 million in operating cash. In total, we've invested about 55 million now in Mineral Hill. So the 38 million of operating cash is a great return so far. But we'll pay the project off, or that investment, pretty soon, and then shareholders will be in front and get those rewards as we generate the free cash from the project. We have a 6-year mine life. So when we started, we just had a couple of years of tailings retreatment. 6 years is at the moment, 1 more year in the open pits, and then 5 years underground. We finished the plant refurbishment, and why I keep talking about that is because that means we're over that big capital hump. Most of our capital is invested or sunk at Mineral Hill. We still do have some capital, but it's to get smaller and smaller from this point on. And we are investing locally. We're very proud of hiring locally around Condobolin in central New South Wales. We're very focused on continuing that strategy and putting as much of our cost base or our expenditure back into the community, whether it's salaries, purchasing locally, or just buying off, local suppliers. We do as much as we can to help the whole central New South Wales region. So jumping over to the transaction, look, MISMA is a great project, produced nearly 4 million ounces of gold over 15 years. We would have loved to have built it, but we've had to acknowledge that it's a big asset. It's bigger than what Kingston can manage. More to the point, bigger than Kingston could fund. So we ran a strategic process which started in November last year. We announced it in November. We really got underway in January, and then it led to a process where we shortlisted a very large number of companies that we approached. We got down to a short list, sort of less than 20. Then we got down to a very, very short list of less than 3. So that's where we landed, and we took that to the timelines of stage 1 then to stage 2. Now we're at the point where we've signed a binding agreement with Octetti Mining. I will talk to Octetti. They're actually quite a very well-known copper producing company, PNG national company, which is quite an interesting partner, and one of the reasons why Octetti was the most successful or the preferred bidder is because it also manages a lot of the other risks around transactions. They have the in-country established both people and the relationships to be able to actually progress MISMA forward. And that was important for Kingston. It wasn't just about value. It was also about that MISMA actually gets built and MISMA helps the MISMA people and the PNG people. So the transaction is split up between sort of 4 stages. There's $50 million of cash coming to Kingston's Australian dollars on completion. Then there's a subsequent $10 million 12 months later, so after completion, and then another $10 million on a final investment decision. So that hopefully is about 2 years away, that final investment decision. Now that's not a definite timeline because Octetti obviously need to do the work, get the approvals, work with the landowners and the community to get the project underway. And then we get a royalty later on during production, which adds basically 0.5% of gross revenue, which is up to about $25 million because they have a buyout option on that Octetti. So that's been really good. So in terms of conditionality, it is actually has very little conditions on it. We do have one CP which needs to be completed, but it does not require shareholder votes. It does not require financial conditions. Octetti have the money to be able to complete this transaction. So that's a big tick and gain, de-risking this for shareholders. We do need ICC approval, so that's Independent Consumer Competition Commission, which is a regulatory process for PNG to go through. We do not expect any issues on that. It's a timeline and it will complete. We also obviously have to keep the business in good standing. We do not want to obviously jeopardise our environmental licence, our exploration licence, what we're doing on the ground. So we've got to keep working, which is what we've been doing for the last 8 years. So basically we've got to see that through to completion and then hand over the MISMA project to the Octetti team to allow them to start their work on their approvals and their plans. Anticipated completion is early next quarter. It could be sooner, but at the moment we sort of think it's going to be in that July-August period or roundabout. So hopefully, obviously for all of us, if it completes earlier, that's a good thing. Our advisors was Argonaut and Ashurst, so they did a great job, and I just want to acknowledge that as well. It was a big team effort. So who's Octetti? So Octetti is currently producing 100,000 tonnes per annum of copper and about 260,000 ounces of gold. So significant producer. Over US 1.5 billion of revenue last calendar year. They are a PNG entity, operating company. They're 67% owned by the state or the government of PNG, and then 33% owned by the Western Province. So, you can see where they are. They couldn't be any further away from MISMA if they tried. So they are right up on the border, but they're very much used to MISMA. Some of their people currently live at MISMA and work at Octetti, and some of their staff that actually came on the site visit used to work at MISMA when it was previously in production, so they're very familiar with it. So we're really looking forward to Octetti doing what they have done at their current operating mine at MISMA. They're used to big scale, large open pits, which is what is needed at MISMA. you can see MISMA Island down there. So what does this do for Kingston? It materially strengthens our balance sheet. I can see a lot of questions have already come in on capital management, so I'll do what I can to address that at this point. That we do want to be debt-free post this completion transaction, so we've already indicated to our debt provider, Pure, that we would like to pay the debt back early after we complete. Also, I just want to acknowledge Pure at this point. They have been a very good supporter of Kingston, and they helped us enable the growth that we have delivered at Mineral Hill. So it's been shareholders and debt holders that have really helped fund that expansion. So thank you. Total consideration was bigger than our market cap. We've obviously caught up to that. So that's been a nice benefit for shareholders. It does eliminate a lot of outgoing cash. Obviously, we spend about $2 million a year on MISMA, and we pay interest and servicing of debt of about $2 million a year. So that, to me, that's like an early royalty. So we're getting the royalty earlier than when the mine starts producing. So that's a really big benefit for shareholders, and allows us to put some of that money straight to drilling. We have balance sheet flexibility. I keep mentioning drilling. We want to pick up our drilling. We have a drill rig on site now. We should be going to a second drill rig as soon as we can. We'll update you on that as we progress. It does give us a growth platform within Cobar, and we still have exposure to MISMA because there's 2 more payments to come, as I've mentioned, and the royalty. So this is corporate snapshot. So this is obviously pre-completion, and as we announced, so market cap is up a bit now from the 76 million, just over 100. Cash at last quarter was 12.5. We also have another 7.4 million in cash on the balance sheet for our environmental bonding. So that's also one of the things that we've worked quite hard to do, is cash back our environmental liability, whereas a lot of companies have debt. So we will be truly debt-free post this transaction. Very supportive shareholders, and I want to take the time to thank them as well. So Delphi, Quintana, Winchester and Farjoy are our top 4, and they've all participated in the raises. But also I just want to thank all of our smaller shareholders and retail shareholders who also have supported the company over the last few years. It's great to have that support, and now it's nice to deliver some value back to shareholders. This is the Pierce North open pit. This is where we're currently mining gold and silver from. This was our production for the next sort of 6 months, and then we've also got a second pit. You can't see it in the south of that photo, called Pierce South, and then that gives us another 6 months of open pit production. So the 2 pits go for about 12 more months. They are predominantly 95% gold, 5% silver. So you shouldn't be thinking about copper yet, but it's not far away. It's only about 12 months away for the copper production. So what are our priorities at Mineral Hill, and how do we expand? We want to drill more holes. We need to identify a second, or more to the point, a third underground ore source as fast as we can, and leverage off our infrastructure. So when we purchased Mineral Hill, not only did we get a great team, we got an operating plant, but we also got 2 undergrounds with infrastructure. So this is all about leveraging what we can deliver from these assets. I know there's going to be some questions about what's this plant worth and what's the value of Mineral Hill today, but it would cost a lot more than our market cap to be able to build the Mineral Hill plant and put those 2 declines in. So there's a lot of value from still to come from Mineral Hill. We will undertake surface exploration. We'll be going to be very focused on prioritising the near mine targets first. So we'll be drilling within our mining licence because it's a little bit easier for approvals and obviously to get that done. And then we'll be drilling around our mining licence in our EL 1999. So really focusing on what can get into the mine plan in that 5 to 10 year window, really trying to build out the long mine life at Mineral Hill and support the expansion. Then we're going to move on to the more exciting, sometimes more risky, but the risk reward is there. When we go on to the greenfields exploration, looking for a new discovery. My personal view is we are well overdue for a discovery on the Mineral Hill tenements, because people are discovering them to the south, people are drilling to the north, and we're obviously operating a mine with 7 ore bodies in the middle there. So there's the odds are, I think there's another discovery at Mineral Hill. We just now need to look for it. over the years, we've been very much focused on cash and cash generation. So we haven't been in a position to do a lot of exploration, but this transaction changes that. And strategically, we are looking to become a processing solution for the southern Cobar area. As I said earlier, there's 4 operating plants in the North Cobar. There's only 1 operating plant in the southern Cobar. So we want to look to and talk to third parties. We want to understand what people are doing with their resources, and it doesn't make sense to build another plant if it can be economically treated at Mineral Hill. This is our underground ore body at Southern Ore Zone. This is ore body number 1, where we'll be starting the mining. Development is expected to start in this area sort of February next year. We're already down there now. We're drilling and we're bolting and meshing. We're pumping out. We're getting the ventilation infrastructure set up. So this is where we start on initially on our underground, and then there's more to come, which I'll talk about on the next couple of slides. There's our underground drill rig. Another big call out to another supplier of ours, Tightline. They're doing a fantastic job. They really have shown that they understand underground drilling very well with the performance to date at Mineral Hill. So the opportunity for us is at depth. We've got all of our ore bodies are open at Mineral Hill, as you can see from that diagram below there. And we're very shallow. We're currently 300 to 400 metres down, where the rest of the Cobar Basin is 1 to 1.5 kilometres down. So there's a huge opportunity to grow at depth and long strike. And we've also got a new discovery in the footwall of the Southern Ore Zone. So potentially there's opportunity to keep growing these ore bodies basically further out into the footwall and hanging wall. So this is what our underground priority is. You can see quite simply, I'm just going to talk to the red circle and the blue circle. So the red circle is number 1. That's where we're currently drilling. That's where we're going to continue to drill for the next 6 months or so. And that's where we're going to start mining. So that's the Southern Ore Zone. We think we've already got 5 years there, and we think that's going to grow materially. And that discovery is at 12.5 metres at 3.4% copper equivalent. So we drilled that hole, I think it was in late 23. We've got 2 holes into that area now. So now we need to get in there from underground and really drill that out. Then the next priority will be moving to the brown circle, the dotted blue line there. That's where we think there's going to be another ore source. So we're going to prioritise drilling through Jack's Hut, the southern end of Jack's Hut, looking at GD 140. We're already working on a resource update for Parkers Hill. So as I said earlier, there's 7 ore bodies that have been mined at Mineral Hill, and 6 of them here on this diagram are in the underground. So it's a pretty exciting piece of ground. It is absolutely not closed off in any direction. There is opportunity everywhere. There's just a nice plan view of what I just showed you there in sort of that long section, oblique view. So here's the Southern Ore Zone where we're starting. There's the Jack's Hut area. You can see the Eastern Ore Zone, Parkers Hill sits out here over to the east. So it's a very small footprint, and there's Pierce North Pit that we're mining and Pierce South. Just on long section, you can see, so this is where we get out to the exciting exploration, the sort of, the greenfields discovery opportunities. So we need to be looking outside our mining footprint as why we're drilling within it. So obviously we all understand there's a lead time to get projects approved. So drilling them now is a priority for basically so that they can come online in the next 5 to 10 years and continue to feed the Mineral Hill plant. So our strategy here, I'll just jump to the next slide. You can see is we're basically going to start heading sort of northwest from our mining lease, drilling these targets in priority and looking to see which ones can actually be proven up if they're there, and work out which one can come into the mine plan as fast as we can. So expansion strategically. So where do we go from here? I've talked you through. We've completed the MISMA binding agreements. Now we'll close that transaction as fast as we can. That puts us in a very strong position to grow up Mineral Hill. Can we get Mineral Hill to 2,000 tonnes a day? Well, that's what it's approved for. So that is one of our aspirational targets, to get this plant to do twice the size. So to basically get to a 70,000 plus gold equivalent producer. Now, we'd like to do that as fast as we can, but we need to go through the process. We need to drill our current resources. We need to look for discoveries, and we will start to look at regional acquisitions. Now, I'm not talking necessarily about corporate transactions. I'm talking more about project-specific earnings, options agreements on resources that can be processed at Mineral Hill. We don't need to chase ore feed right now. On our current mine plan, we're full for the next 6 years. But we would like to underpin an expansion of Mineral Hill. So that is one of the priorities. There's been a lot of questions about the expansion, so I'll try and tackle those at the end. But it is all to come. That work, that engineering, those studies are still needed to be done. In summary, before I open up for Q&A, so experienced management team, we're very much focused on mining, operating mines, and hopefully building mines. We don't want to just be an exploration company. We are very happy that we're going to have flexibility with a strong balance sheet. Mineral Hill sets us in a really good place. We want to get it bigger. We want to grow. We want to be a copper gold producer. Ideally, copper with a gold credit or gold with a copper credit is what we really are looking for. We want to increase our production rate. We want to grow our cash flow, obviously deliver shareholder returns through cash delivery and longer mine lives. We want to leverage our advantage in the Cobar Basin, and we are going to be obviously inquisitive to accretive transactions, bigger transactions in due course. Nothing in the short term, but eventually we need to start thinking about what is next for Kingston. So I'll pause there, Ryan, and I'll stop sharing. Is that probably the best way to go?
Yeah, either way, Andrew, really appreciate the presentation, man. Absolutely brilliant. I thought you've ticked off a couple of my questions, so you only left me with a boring one. So again, I'll remind individuals, obviously I've got a list here, but if you'd like to ask anything additional, please submit it through using the Q&A function on Zoom. Now, Andrew, just to kick things off, nice and boring one, mate. Tax and implications for the sale of Misima. Can you walk us through those?
That's very easy. We do not, in fact, we've got to put that in the slide pack because we've got asked this every time yesterday and the day before. So no, there isn't tax payable on the 70 because it's a PNG share sale agreement, share transaction. But also just to help people understand, we've spent nearly $50 million on Misima. So there won't, initially it's literally a wash. So no, that we do not expect to pay any tax on the 70 million. Once the royalty kicks in, there would be obviously corporate company tax on the royalty because it'll be a revenue stream.
Of course. All right, brilliant. Thank you for the update there. Well, that ticks off my questions, so we'll just move to the submitted ones now. First one I've got is an interesting one. As a former fund manager yourself, what type of fund management will now be invested into KSN? Does KSN need to reach a market cap threshold or production rate or cash generation level to attract even greater investment interest?
Yeah, I think it does. I think we do need to get bigger in terms of scale for the market. Like there's this magical, used to be $100 million market cap when I was a fund manager. Now it feels like it's this magical 200. You got to get these us smaller miners need to get towards that 200 million before we really get on the radar with the funds. And even the the GDX and the benchmarks when you get included in those. So for that would be really nice to get to that as fast as we can, obviously.
Yeah.
We think an expansion of Mineral Hill will get us there. A discovery at Mineral Hill will get us there. And then obviously getting on to bigger corporate things. How do you get to $1 billion company? Well, we've got to get to 200 first, right? So it's just let's just keep stepping Kingston forward as fast as we can.
Yeah, brilliant. All right, well, thank you for covering off that one. Next one, just a bit of a pivot here. Are you able to provide an update on the pit currently being in the transition zone from oxide to fresh material? Is gold production expected to reduce in this transition phase?
Yeah, so we are literally moving out of the transition material now and into the fresh material, into the sulfides. So it's a very topical question because I've just had a call with the team this morning. We are commissioning the float plant right now. So basically ramping that up as we speak. So we did 4,000 ounces last quarter. So this quarter, I think it will come down, maybe in that 3,000 to 3,500 ounces, and then it'll ramp back up. And it'll ramp up really to be above the 4,000. So we are targeting getting it to 5,000 ounces a quarter and then pushing to 6,000 ounces a quarter. So next financial year should be an actual step up in production.
Okay, brilliant. Thank you for covering that one. So we're just going to shift here to a couple of questions regarding just capital management distribution.
Mhm.
Question here reads, once 50 million is in the account and the debt is paid off, how much will it look to improve earnings?
How much of, sorry, the 50 million to
Yes.
approve earnings? Can you just
So,
go again on that one?
so once the 50 million is in the account and the debt is paid off, how much will the 50 million look to improve earnings?
Yeah, well, that's a very good question. So, to me, improving earnings is in picking up production for the next financial year, so growing our open pit production and getting the underground on. So, financial year 26 earnings should improve on 25 just by the pits. Then
Yeah.
the underground comes on and the production lifts again. So, the balance sheet or the 50 million helps obviously bring all that forward. Would we start the underground a bit earlier? Maybe we do now that we've got this we've got the flexibility to be able to do that. So really, it also takes away. So Mineral Hill's been funding the interest on the debt, so that pressure comes off. So that money now can go to drill holes. So that's our another saying we have a lot in the company is drill holes and declines. We need to get moving, but yeah, they're the priorities.
Okay, of course. All right. Well, thank you for covering that one. Just shifting here to another one. Why has the market cap of KSN only increased by 15 odd million when the deal is worth 95 million? I.e., what is the market missing?
I think it's just completion. We have to complete. I think the market's going to look to, give us the value of the cash component of the transaction as we get to completion. So, obviously, if we can update on completion, we will. But it's a regular process. We just got to go through. So, it's a pretty short timeline, and I think that's when the market will value the rest of the transaction.
Okay, brilliant. Well, thank you for that. Now, just shifting again. What are your plans to replace the investment opportunity the company had with the sale of Misima, and why do you think that this was a valued move given the extensive infrastructure already in place and a rising gold price?
There was very little infrastructure at Misima. So just to remind everyone, there was an airport, hospital, roads, and all those sorts of things for the community. But the processing plant had been removed many years ago, and the mining site had been rehabbed. So we still had to invest $470 million to unlock the value of Misima. And from $75 million market cap, we couldn't fund that 470, so we couldn't deliver the value that was just raised. So we needed to find a partner or a sale or a joint venture, which is what we did. We tried to exhaust all of those options, and this is the way we landed.
Okay. All right. Thank you for that one. Just another here before I shift it to the live submitted questions. Here we go. What needs to be completed to increase the mill throughput to 700,000 kPa? When is this planned to be completed by? I presume this is in relation to Mineral Hill.
Yeah, and I've had a lot of questions come in on that. So I'll try and talk to what I can because we've still got to do the work. And this is one of the things that we're trying to demonstrate to the market is when we say we're going to do something, we're going to do it. So we still need to do the feasibility on the expansion. My view is on how much it costs. Well, we spent $14 million on refurbishing the whole plant. I'm pretty confident it's going to be less than that to expand it. What do we need to expand it? We need more grinding capacity, so probably an additional mill. We already have 2 mills, so we probably need to go to a third mill, and we need to install more float capacity. Now, both of those two items, because they're not big mills, are not a lot of money. I mean, they're a few million each, but it's not something that we can't fund from cash flow. So our intent going forward with Mineral Hill, to give everyone some comfort, is that it will fund its growth. And that's really important. So we don't have numbers on that. And how soon can we do it? Well, we need to build our tons, our inventory, our resources first. That then underpins the expansion because I don't think shareholders want the board to approve an investment without having the tons to feed it. So, we need to get the drills turning, which we are. We've already got one. We'll get to a second one as fast as we can. Then we'll kick off the feasibility on the plant expansion. Ideally, I'd like to be doing a feasibility on a plant expansion by the end of this year, starting it.
Okay. All right. Well, thank you for the clarification on that front. I'm sure investors will appreciate that. Nice, easy one to give you a bit of a breather. Are any drill results pending currently?
We are due to update the market in the next few weeks on drilling. Yes.
Okay, well, back to some fun ones that have been submitted by participants here. The mine plan, the mine plan had 24 kilo ounces of gold for FY25 and FY26. That implies an average of 6 kilo ounces per quarter. How far are we away from reaching that type of run rate?
Yeah, I think I said earlier, so next quarter, I think we'll be around that 5,000 ounce, and then the quarter after it's 6,000 ounce. So we're later than we'd want to be, but that's mining, right? We're doing the best we can to pick that ramp up, hit that 6,000 ounce number. So it's definitely next financial year.
I appreciate that one. Interesting M&A question here. Does this transaction with MISMA sale now set up KSN as an attractive gold and profitable cash producer with no debt and 50 million in the bank, put a target on KSN in what is increasingly aggressive M&A environment, especially with gold running so hard?
Can you just go again with that?
Yeah.
I don't get it.
So obviously with the transaction with MISMA, does
Yeah.
this now set up KSN as an aggressive M&A target?
As a target. Well, if the
Yes.
market doesn't value the transaction, then obviously someone else might, right? And it's also the Mineral Hill, we were trading at $75 million market cap previously, which our view was basically what the market was valuing Mineral Hill for. We start to hit the production numbers that we just talked about and start to deliver the cash flow, then the market needs to value Mineral Hill higher as well, in my mind. Otherwise, we could be a target. Now, in saying that, we've got 4 very large shareholders. So, the offer's going to want to be very good for them to accept it, I think.
Cool. All right. Well, we'll appreciate the update on that one. And just one more to finish us off for the day. People have been talking about a Cobar consolidation for years. How feasible is corporate activity in the southern Cobar Basin today?
Yeah, they have been talking about it for years, and I think part of the problem on that is that every company, including us, we all had stuff we needed to get done. For example, for us, we had to get the plant refurbishment done. We had to get the production ramped up, which we're doing now. We had this great project in PNG that we weren't getting value for. We needed to sort that out. So everyone's in the same position. Peel's got the things they're working on. Talisman's drilling to the south of us. They're drilling that. Australian Gold and Copper's drilling to the south of us. So everyone's got stuff that they're working on, which makes consolidation harder when people aren't actually ready. What I would say is that we all talk, the whole basin from the north to the south. We all know each other. We're all talking. We're all trying to work out what's more efficient and what makes sense. So, I think at some point consolidation in Cobar will happen. We're in a much stronger position now to even entertain the thought of picking up another project that can be trucked to Mineral Hill. Hopefully some stuff happens in Cobar in the next year.
Oh, brilliant. Appreciate the update there. Well, Andrew, that about wraps us up. Is there anything you'd like to leave us with this morning?
Just on the questions front of it, we've had a lot more questions come in on the processing plant and expansion. So I just, in due course, as soon as we can update on that, we will. So just bear with us on that. And look, in closing, thank you to the Kingston team. I really think that this has been a massive effort and a great team effort to get Kingston to where we are. We talk internally about this being our transition year. It is our transition year. This is step 1. So get our balance sheet in order, continue to ramp up production, increase our free cash flow, look for opportunities to grow Mineral Hill. So there's plenty of value left in Kingston.
Well, Andrew, thank you very much for your time this morning. And ladies and gentlemen, thank you very much as well. Enjoy the rest of your day. Cheers.
Thanks, everyone.